Students, welcome back to SR tutorial. Okay, so today I'm going to discuss regarding the American approach, okay, with suitable examples. Okay, so what was American approach? Okay, there were 5 heads of account. Number one, it is asset, then liability, then expenses, then revenue, and the last one is drawings. So if asset increases, you know it should be debited. If it decreases, it should be credited. If liability increases, it should be credited, and if it decreases, it should be debited. Expenses, if it increases, it should be debited. If it decreases, it should be credited. Then revenue, if it increases, it should be credited, and if it decreases, it should be debited. Then drawings, if it increases, it should be debited. If it decreases, it should be credited. Okay, this was the rule for American approach. Okay, now I'm going to explain you the American approach with suitable examples. Okay, see here, cash introduced into the business, rupees 50,000. So here cash comes into the business, and you know cash is an asset. Okay, so asset position of the business goes up. Okay, and we know when asset increases, it should be debited. At the same time, capital also gets increased. Okay, so it should be credited. Being cash brought into the business, amount you have to put. What is the next case? For liability, goods purchased on credit from RAM. Okay, so goods used for business, okay, has been purchased on credit from RAM. Okay, here the name of the creditor has been mentioned. Okay, so you see here purchase account is debited because here purchase is an expense account. We know when expense increases, it should be debited. So purchase account is debited to RAM. RAM here it is liability. Liability gets increased, so it should be credited. Being goods purchased on credit, 5,000. Okay, so you have understood the second case. Then for the third case, if expense increase, here salary paid is an expense. Okay, so salary is an expense account. When expense increases, it should be debited. So salary account is debited. Sorry, I forgot to write the debit. Okay, so you see salary is an expense account. So if it increases, it should be debited. And at the same time, while payment of salary, cash goes out. So cash is an asset. When it decreases, it should be credited. So salary account is debited to cash account, 10,000, 10,000, being salary paid. Then for rent received, rent is a revenue for the business. When rent is received, asset cash comes into the business. So asset increases. When asset increases, it should be debited. And rent here becomes the revenue for the business. So when revenue increases, it should be credited. So cash account is debited to revenue received account. You have to put the amount, being rent received. Then for withdrawals made, you see here, drawings account is an expense account. Okay, when it increases, it should be debited. Okay, and at the same time cash goes out of the business. Okay, a partner of the business has withdrawn some amount of money from the business, so that is drawings. Okay, any amount of money withdrawal from the business is drawings. So drawings account is an expense account, so it should be debited. Okay, drawings increases. Okay, so at the same time cash goes out of the business. So cash is an asset. When it goes out, it should be credited. Okay, amount you have to write, being withdrawals made by the business. Okay, so these are the 5 illustrations I have given you to explain the 5 heads of rules for 5 heads of American approach. Okay, cash introduced into the business, goods purchased on credit from RAM, salary paid, rent received, and withdrawals made. Okay, so I hope you have understood, okay, the American approach very nicely. Okay, if you like my video, please subscribe to my channel. Thank you.